So I'm just going to go through the trade that you did there, Zena, which is the DAX trade that you placed on the 12th. So I've got the position marked out here. I'm going to assume the reason for the entry on the lower time frame is that you broke this little structured low here. Correct me if I'm wrong, but I believe that will be the reason why. And once that broke, we were at the open 11 o'clock, which is where the 11 o'clock my time, but that's where the volume tends to come in for the likes of DAX, which I think is 8 o'clock UK time. And the higher time frame reasoning from the hour first, so the reason why that location was where you looked at executing was this one here, which is perfect, okay, which is absolutely fine. Regarding your stop loss, regarding your TP, I think they were both very, very sensible. Let me just get back to it. You had your stop loss above the high in case that order block didn't hold up, which is fine. And you had your target, I believe it's actually at, roughly speaking, it's at an hour order block as well. So regarding the actual position itself, there's nothing wrong with it. You did everything that you're supposed to do on those lower time frames. Now, let's go on to the hour. So I'm going to kind of structure this in a way where we look at the overall structure that's occurring first of all, and then we look at the lower time frame to see how maybe you could have exited a little bit early and saved yourself the loss of a unit. Okay, and this is what I do a lot more now, is I try not to lose a unit on a trade. If I notice that it's rejecting or from something that potentially means that continuing, in this case, bullish order flow can occur, then I might come out a little bit sooner than letting it roll all the way to my stop loss. Okay, and with DAX, especially at 8 o'clock UK time as well, because it's either going to keep pushing or it's going to reject, right? And if it keeps pushing, it will just the volume will take it to the level that you marked out. But obviously in this case that didn't happen. Okay, now on the hourly time frame, the thing to be concerned about here is this bullish order flow that began occurring the day or the day before that. So we had a high created, we had a new higher low created, we had a high created, we had a new higher low created, we had a high created, we had a new higher low created. And we can also see that we had this this order flow respected here as well. Now I think that's probably one of the reasons for your target being this region here, because I think you would have also seen that, and you would have potentially expected that maybe this isn't going to be the trade that flies all the way and takes out new lows, because we've already got bullish order flow back in play. Okay, and that's right what you did there. Now that I think the key on this trade to kind of potentially help you from not being involved or at least getting out early was the 12th was, one second, the 12th was this one here, right? So if we think back to the way that I do the weekly market breakdown, what you're gonna notice is that we had a bullish candle, we had a respect of the low, we had a break of the high. We then had a bullish candle, we then respected the low again, and we broke the high. So what can we expect in the next day, providing there's nothing in the way on the time frame that we're working on, or maybe one below, which would be the 4 hour? We would expect the same thing to happen, is to respect the low, not break that low, and actually break that high. So if we put in those higher time frames, especially like the daily is very crucial, because it depends on what day of the week you're trading, right? So it's no different to where we are right now, where we've had a bearish candle on Friday. We have respected the high and we've broken the low. So that's kind of job done really on DXY. How much further it go really depends on this level here, which is most likely is a 4 hour region. But if we took that into consideration when placing that trade, you might have, one, not placed it at all, or two, you might have been able to get out early because you noticed on the lower time frames that the rejection was occurring from an order flow. Okay, and that's what I'll show you now. So if we go on to that 15-minute time frame, if we go on to that 15-minute time frame again, and we just scroll back to the 12th. This is why I'll do this on a daily basis, because I then won't have to keep going back, and my laptop doesn't seem to like recording these days at a decent speed. So okay, so there is our position. So what we can see is that if we look on the 15 time frame, right, we've got a higher high and a higher low. We've got a higher high, we've got a higher low. We've got a higher high, we've got a higher low. We've got a higher high, right? So what I would do is I would be marking out these kind of regions, right, where we've got order blocks and order flow, which take the market to the new high. And this one, for example, is where the market stopped at, okay? It stopped, it created a 15-minute support, and then, same as the higher time frames, we saw us begin to respect the low and break the high. Now at this point, if you want to, you've got two options. You either close the whole position here, or you can close half here and see how the candle finishes. If the candle finishes bullish again, okay, then again what we can do is we can look at the same thing where we can say, well look, if we start to push lower here, we will allow it and we will see what happens. But if we then go and break the high without breaking the low, then we might expect that this market's going to push higher, and we can close the other half of our position here. And that will then mean that you actually come out of that trade with less than a unit loss, and in this case probably less than half a unit loss. So it's all about just, again, you guys know this already, and I'm not saying that we can avoid every losing trade, because obviously there's so much to think about, there's so much to look at. But what we can do is we can manage our risk accordingly. And if it prevents us from losing a whole unit, then when our winning trades do come, then of course the profits and the overall profitability of your account is going to increase. So that's personally what I would have done. You had your hourly order block marked out perfectly. You had your targets and your stop loss marked out perfectly. It's just that daily time frame that caused a little bit of confusion, where we had some strong bullish pressure coming through, and therefore it was probably a case of, watch those lower time frames, and if we see those rejections occur, we might be able to save ourselves some units. And that's how I would have personally managed that trade. I would have, if I've entered on the same point that you did there, which was fine, you had the break of structure, you rejected from the order block. But if we then start to see buying pressure come up, one candle, two candle, by this point we have to say to ourselves, right, it's actually rejecting. Has it rejected something of importance? Well, yes, it has. It rejected this region here. And this region, as we know, is important because it was the leg that took us into the new high. It's the order flow that we've currently got going on this market. So hopefully that helps and gives you a bit of an insight into other things to look at and focus on once you've got your trade on, and also to look at that daily time frame to get that clarification of what's going on, the day that you are actually looking at placing that trade as well. All right.